Hi guys, Eddie Papa from Multi Traders, where I teach forex trading and give trading techniques. On this video, I'm going to be talking about the DXY. I'm going to be doing a market breakdown on DXY. But firstly, I would like to apologize for not uploading and leaving you guys in the dark. But on this video, I'm fully back on YouTube, whereby I'm going to be posting almost 2 times a week. So basically, at this point, I'm just going to be doing a quick analysis on the DXY. So now, firstly, one thing that I do when I open my chart is to check market structure. As you can see, the price has been going up and down, up and down, up and down, creating lower lows and lower highs. But now we're going to be focusing on the current market price. We are on the daily chart with what? With the DXY. So now, if you can check the market structure, we're having lower lows, lower highs, lower lows, lower highs, lower lows, lower highs. But now, at this particular point, we saw the market respecting a certain pattern, which is an inverse head and shoulder. So now, looking at a bigger picture, we can see that okay, we are having an inverse head and shoulder, left shoulder, head, right shoulder, going to the upside. But even on the bigger scale, we are having the same thing, of which this will be our left shoulder, our right shoulder for me to push the price to the upside. So now we already know what we are going to be focusing at. But now you can see that, okay, the reason why we're going to be focusing on taking buys here, it's not only because of the inverse head and shoulder. It was because of, now, if you can check, our previous lower high was what was violated here, and a new high was formed at these areas now. So now, as you already know, the way I trade with the Fibonacci. And I think this is the simplest way for you to know how to trade. So basically, in the Fibonacci strategy, the rules are simple. We have the rules for a downtrend, and we have the rules for a downtrend, an uptrend and a downtrend. So in a downtrend, they say for you to plot a Fibonacci in a downtrend, you need to plot or you need to start the Fibonacci from your previous lower high to your current lower low to get your potential lower high. So now our previous lower high is this one, our current lower low is this one, and as you can see, price came back to our Fibonacci to actually do what? To actually go to the downside. So now what's happening on the current market price? We're having 2 points, of which it will be our what? Our low and our what? And our high at our current market price. So now if we are using a Fibonacci, we are going to be doing what? We are going to be using our Fibonacci strategy rule in an uptrend, mainly based on what? This lower high was broken and a new high was what? Was formed. So now we are shifting into what? Into an uptrend. As you can see, even here the price was broken. And for more confirmations, if you can check, is that okay, here we had price rejecting 1 2 3 4 5 6 7 8 9, meaning around 9 days there. 1 2 3 4 5 6 7 8 9, we had price respecting this what? Respecting this zone around there, of which it was our previous resistance, now acting as support. As you can see, it was failing to break. It was failing to break our what? Our neckline. So meaning it's a definite resistance now acting as a what? A support. So even if you are a trendline trader, you were going to have the direction for the DXY for the previous month or 2 months ago. So now I'm just going to be doing a quick analysis on the what? On the DXY using a Fibonacci. Remember, in an uptrend, you start your Fibonacci from your previous higher low to your current higher high to get your potential what? higher low so that you can buy. And remember, we buy low and sell where? And sell high. So now if you can check, we having our 2 points. We started our Fibonacci on our higher low, and we're having our higher high around those areas. So now we already know that, okay, if we are going to be taking profits, we're going to be taking profits there. Sorry about that. We're going to be taking profits there and here. Those are our take profits, meaning our negative 0.27 and negative 0.618. So now the market is telling us that, okay, we are on our 50 and 61.8 level. And remember, that's where the Fibonacci tells us that around here, we have to see the price doing what? Moving to the upside, or even coming to this area to form a what? To form a new high. Ne? So now, remember, the candlestick confirmations and our pattern confirmations with a Fibonacci, they work hand in hand. So with Fibonacci, I use the most famous candlestick pattern, which is what? Which is a doji. So as you can see, we have our doji here, signaling that we are going to be going to the upside, or an upward momentum is about to come. So now we already know that, okay, we have what? We have broken our what? Our trend line, came back and retested it for the second time, meaning the first time and the second time, and now we are forming something like what? Something like a double bottom, meaning the first bottom and the second bottom going to the upside. That's the first one. We're having a what? We're having a inverse head and shoulder. Retesting the what? Retesting the neckline of the inverse head and shoulder. And now we have another confirmation whereby it's a what? It's a Fibonacci confirmation that around here we have to get rejections to push the price to the upside. So now I think we already have 4 confirmations. So basically the only thing that you need to do is identify your market structure, plot your higher highs and higher lows, lower lows and lower highs. Then after, you already know where to enter and where not to enter. Now from the daily, you can move to the 2 hour just to check what's really happening. You already know that, okay, on my bigger time frame, I'm focusing on what? On taking buy trades. Then now, if you are a trendline trader, you're going to be putting your trend line around those areas and not forgetting a touch that can happen when the price goes to the upside. So now you're going to be focusing on price coming to this area, and if it does break, you have another second confirmation of doing what? A break and a retest. Then you enter a buy again. And one thing, the reason why I'm saying around this area we're going to be seeing a lot of momentum, not a loss in momentum, if we do what? If we don't break, meaning we're going to be having a what? A support zone around this area once the price breaks around these areas. So now we're going to be looking at how the price approaches our what? Our trend line. If it approaches impulsively, then we know that, okay, we are going to break and retest either the trend line or the support zone going to the upside. And another area that we also need to be aware of, it's this area, around this area, you see. So now you can see that we are having a lot of confirmations that is telling us that we are about to go to the upside. But this is just an analysis to help you guys see that you can have a lot of confirmations before actually entering a trade. So now we can do what? We can clone our trend line and try and fit it around these areas. We can try from here, it's 1-2 touch, and we can also try around here. But for now, let me just put it here so that my chart can be clean. So I'm just gonna remove my Fibonacci there. Then from the 2 hour, you can go to the 30 minutes. What's happening on the 30 minutes? I'm also going to remove that thing there. I already know I'm on my 50 and 61.8 level. Let me just remove everything. I already know that I'm on my 50 and 61.8 level. Now, one thing I have to check is that do I have a support or resistance zone? Okay, I'll just say this is my what? This is my support and my resistance zone, because I'm having what? I'm having price touching this area frequently. I have this touches here, I have this touches here. So meaning now I can see that okay, the price is really respecting that area. Now what do I have to do? I'll just have to plot my what? Uh my trend line there, just to get another entry uh, uh, confirmation or an entry area, whereby I'll just wait for the price to break, retest, get my first entry, go to the upside, and worry about others later. So this is what I'm seeing on the what, on the DXY. And remember, the DXY goes hand in hand with all the USD pairs. So meaning now we're going to be focusing on buying USD, JPY USD CAD, and selling GBP Euro USD. So from me to you, make sure you do what? You study the markets and understand what you are really doing in the markets before actually placing that trade. So from me, I'm out, guys, but don't forget to like and subscribe and comment down if you find my videos adding value to your trading journey. Dango.